Paying tax on hard-earned money is such a pain in the back. But though we are liable to pay it and will be paying it for so long, have you heard that you are also liable to pay tax on your illegal income? Hello everyone, your favorite channel is back with another intriguing topic. We're going to talk about something that may seem illogical at first glance: the taxation of illegal income. Yes, you heard that right. Even if you earned your income through illegal means, the IRS can still tax you on it. Don't believe me? Well, grab some popcorn and get comfy because I'm about to take you on a wild ride of the history and reasoning behind this seemingly bizarre concept. To start off, let's first understand what illegal income means. Illegal income refers to any money or property acquired through illegal means, such as drug dealing, theft, embezzlement, or any other criminal activity. Most of us might think that earning illegal income exempts us from taxes. The reality is that the IRS can still come after us. So why does the IRS tax illegal income? The reasoning behind this is simple. The U.S. government taxes income from any source, whether legal or illegal. The IRS's mandate is to collect tax revenue, and that includes any income earned by citizens, regardless of how it was obtained. Certainly, let's dive deeper into the history and legal background of the taxation of illegal income. The concept of taxing illegal income has been around for centuries, dating back to ancient Rome, where taxes were imposed on illegal activities such as gambling and prostitution. However, the modern legal framework for taxing illegal income in the United States can be traced back to the early 20th century. In 1913, the 16th Amendment to the U.S. Constitution was ratified, giving the federal government the power to levy income taxes. However, it wasn't until 1927, with the landmark Supreme Court case United States v. Sullivan, that the legal basis for taxing illegal income was established. In this case, a bootlegger named William Sullivan was convicted of tax evasion for failing to report his illegal income from selling illegal alcohol during the Prohibition era. Sullivan argued that he couldn't be forced to incriminate himself by reporting his illegal income on his tax return. However, the Supreme Court ruled that the Fifth Amendment did not protect Sullivan from reporting his illegal income on his tax return. The court reasoned that while the government couldn't use Sullivan's tax return as evidence against him in a criminal trial, he was still required to report his income truthfully and accurately. The court held that the tax code applied to all income, whether legally or illegally obtained. Since the Sullivan case, the IRS has used a variety of methods to detect unreported income from illegal activities. The agency uses data analysis, computer programs, and other tools to identify suspicious patterns of income and expenses on tax returns. The IRS can also investigate individuals and organizations suspected of engaging in illegal activities and use information obtained during those investigations to uncover unreported income. One example of the IRS's efforts to tax illegal income is the case of Al Capone, the notorious Chicago gangster. Capone was one of the most successful and notorious bootleggers during the Prohibition era. He made millions of dollars selling illegal alcohol, but failed to report any of his income on his tax returns. In 1931, Capone was indicted on charges of tax evasion, among other crimes. The IRS spent years building a case against Capone, using wiretaps, informants, and other investigative methods. The government was ultimately successful in convicting Capone on multiple counts of tax evasion, and he was sentenced to 11 years in prison. The Capone case was a landmark victory for the IRS and sent a message to other criminals that they couldn't evade taxes on their illegal income. The government's ability to tax illegal income has also been used to prosecute individuals involved in other illegal activities, such as drug trafficking, fraud, and money laundering. While the IRS has the authority to tax illegal income, it's important to note that individuals aren't required to incriminate themselves by reporting income from illegal activities. The Fifth Amendment protects individuals from self-incrimination, so you can't be forced to report illegal income on your tax return. However, if you do report illegal income on your tax return, you could face legal consequences. Reporting illegal income could lead to criminal charges or civil penalties, such as fines or back taxes owed. It's important to consult with a tax professional or attorney if you have questions about reporting illegal income. In addition to the legal consequences of not reporting illegal income, there are practical reasons why you should report it. If you don't report your illegal income, you won't receive credit for the taxes you paid on that income. This could affect your eligibility for certain government programs such as Social Security or Medicare. Moreover, if the IRS catches you evading taxes on illegal income, you could face much stiffer penalties than if you had reported the income honestly. For example, tax evasion can carry a prison sentence of up to 5 years and fines of up to $250,000 for individuals and up to $500,000 for corporations. Additionally, the IRS can impose civil penalties and seize assets to pay back taxes owed. So while it may seem counterintuitive to report illegal income to the IRS, it's actually in your best interest to do so. Not only is it the law, but it can also help protect you from legal and financial consequences down the road. Now, you might be thinking, but bro, why would anyone willingly report their illegal income to the IRS? That seems crazy. And you're not wrong. It's a risky move. But there are instances where it can be the right choice. For example, let's say you were involved in a drug trafficking operation and made a significant amount of money from it. You might be worried about getting caught and facing serious criminal charges, so you decide to turn yourself in and cooperate with law enforcement. As part of your cooperation, you might choose to report your illegal income to the IRS and pay the taxes owed on it. This might seem like an extreme example, but it does happen. The IRS has a program called the Voluntary Disclosure Program that allows individuals to come forward and report previously unreported income from illegal activities. The program offers certain protections and reduced penalties for those who voluntarily disclose their illegal income and cooperate with the IRS. Of course, this is not a decision to be taken lightly. It's important to consult with a tax professional or attorney before deciding to voluntarily disclose your illegal income. The IRS also has the authority to seize assets and property acquired through illegal means, such as money from drug trafficking or theft. This is known as asset forfeiture, and it allows the government to seize property acquired through criminal activity. Now, you might be wondering if you have to incriminate yourself by reporting illegal income on your tax return. The answer is no. The Fifth Amendment of the U.S. Constitution protects you from self-incrimination. This means that you cannot be forced to report any illegal income on your tax return. However, failure to report your income truthfully and accurately can result in civil or criminal penalties. So there you have it, the taxation of illegal income by the IRS. While it may seem strange at first, the reasoning behind it is simple. The U.S. government taxes income from any source. However, the IRS also uses this concept as a way to catch criminals and identify patterns of illegal activity. Now, if you'll excuse me, I need to go report my earnings from my underground catnip empire. Just kidding. Remember folks, crime doesn't pay, but taxes always do. In conclusion, the taxation of illegal income by the IRS is a complex and often controversial topic. While it may seem unfair to tax income that was obtained through illegal means, the law is clear that all income is subject to taxation, regardless of its legality. While individuals aren't required to incriminate themselves by reporting illegal income, there are legal and practical reasons why it's often in their best interest to do so. And for those who choose to cooperate with law enforcement or participate in the Voluntary Disclosure Program, reporting illegal income can be a way to mitigate legal and financial consequences. Well, this concludes everything about the topic. Remember, the next time you're thinking about engaging in illegal activity, remember that the IRS is always watching and is probably not worth the risk of facing criminal charges and hefty tax penalties. And if you do find yourself in a situation where you need to report illegal income, be sure to consult with a tax professional or attorney to ensure that you're making the best decision for your circumstances. We hope this video has been helpful and informative. Hit the like button and share your opinions in the comment box below. For more videos like this, subscribe to the channel and don't forget to press the bell icon. We'll see you guys in another video. Until then, peace.